Let me ask you a painful personal question. How many times have you taken a trade and prices run straight to your stop, knock you out, and then go straight exactly where you thought prices were gonna go? How many times have that happened to you? Or how many times have you been in a trade, you were up, you were winning, you moved to break even, prices come back, stop you out, then go straight to your profit target? How many times have that happened to you? Well, if these things are happening to you, you're probably putting your stop loss in the wrong spot. And by making just a small adjustment, you may go from a losing trader to a profiting trader. So let's talk about where to put your stop loss. Let's go deeper. Hey guys, JD here. So there are very few things that get my goat like losing when I'm right. Can I get a witness? Isn't that the worst? Doesn't that just get under your skin? I mean, you pick the direction, you picked the correct setup, you were patient, you had a good signal candle, you did everything you were supposed to, right? Take the trade, prices come back, knock you out to the tick, and it's the worst. I mean, when I say to the tick, when it knocks you out to the tick and go up, that is the worst. And if you're new to trade, don't understand what I mean. A tick is like one increment, right? So it came back and prices only came back to where you were sitting. Didn't go one tick further, didn't go a point further, just came right down to you, kissed you, kiss of death, then took off and go up. I mean, nothing gets my goat like being knocked out to the tick and then have to sit there, right? That's just the beginning of the pain. After it comes down, gives you the kiss of death, then you have to sit there and watch it truck up to exactly where you thought it was gonna go. I mean, it's a painful thing. It's a painful thing, and it's exactly why I'm making this video. And I'm not gonna be long today. I'm gonna get right into it. I'm gonna show you, especially I'm gonna keep with my theme of second entries. I'm trying to really put people on. I'm trying to put y'all on to the power of the price action second entry before we go into the new year, so you can be armed and ready to rock for 2025. But man, it's a painful thing when that happens. So hey, we're gonna go to a chart today, and I'm gonna cover where you should put your stop loss, and then we're also gonna cover once you're winning, right? Once you're winning, because here's the other goat getter. Once you're winning and then you move to break even, and when that one comes back, gets you to the tick, because that's how it happens. I don't know why. You know, if you've been trading any length of time, you've seen this happen. I'm sure this has happened to you. If you're still watching, you probably still watching because this has happened to you. You move to break even, comes back, gets you to the tick, man, and then goes up and continues. These two things here, man, they cause revenge trading. They are triggers for over trading. You know, they are just downright triggers. So we need to try to keep it from happening, you know, minimize the times that it happens so you won't, so we can keep the enemy within tucked on in. All right. So we're going to go over to a chart, and I'm going to show you, just for one example, I'm trying to find a range too, but I'm going to show you, you know, when you're taking a second entry, where you should put your stop. All right. So let's go over to the charts so we can get rid of this pain of being knocked out to the tick. Let's go over to the charts. Okay guys, so as a refresher, let me get my colors together here. As a refresher, when you're in a uptrend, and the white line here represents the 21 EMA, okay? When you're in an uptrend, prices are making higher highs. If I start here, higher highs and higher lows. Higher high, higher low. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Okay, when you're making higher highs and higher lows, you know you're in an uptrend. All right, and it works the same way in a downtrend. We'll be making a high, then a low, then a lower high, then a lower low, then a lower high, then a lower low, then a lower high. Typically a lower low. This one here is basically matching. Then high, then lower low, right? So it works the same ways. When you're trending down, you're making lower highs and lower lows. When you're trending up, you're making higher highs and higher lows. So for the example, I have been recently teaching about, second entries. All right. And so you start the second entry from the top. You just count to the top and then, lower, break. This is the first entry to just click on. So I had to restart the count. And I have a whole video on that, so I'm not going to go into that again. But this is lower, push up, first entry. Got to restart the count. But what I want to show you as far as where to put your stop, when you finally do get a good second entry, like right here, push down, first entry, push down, second entry long, okay? This isn't great because this is your signal candle and it's a doji, so I wouldn't take it, okay? But then you do get a low, higher low right here with a beautiful signal candle. That one I would take, okay? But what I want to show you is this. Once you enter, let's just say we did use this candle as a signal candle. And again, this is a terrible signal candle, but let's say we did. Your stop should go one tick under that candle. The reason is because what you're hoping is that this candle is going to be the new, let me say it right, higher low. Like this was a low here. This one is higher. This was a low here. This one is higher, right? This was a low here. It's higher than that. It's lower than this one. And if you start from here. So my point is this, just notice how prices don't never come back here. Once you get that higher low, notice how we just keep trucking because we're making higher highs, right? We're making those higher highs. But notice, how prices doesn't come back here. Since we understand that when the market is in a trend, it's going to be making those higher highs or lower lows if it's going short. This is where your stop should go. So when you enter on this push down, first entry, push down, second entry long, your stop should go one tick under that candle, because if the trend continues, and that's what we're betting on, right? We're betting that this is actually the center of the pattern and we're going to get another leg this distance, which this one didn't make it, but there was a lot of money there to be made. So we're betting that this is going to be the center of the pattern, this second entry, and we have this is a low, we got a higher low here. So we're expecting this is going to be the new swing, is what I'm really trying to say. This is a swing, this is a swing up, this is a swing up, this is a swing up, this is a swing up. We're hoping that this is going to be a swing up too, and prices is not going to come back to this area before we hit our profit target. So the spot to put your entry is under the last, I said entry. The spot to put your stop loss is under the last swings. That's the safest place, and it's the most efficient for as far as not having to risk too much. Because if I did actually took this signal candle, entered right here, that's only 2 points. I would only have to risk 2 points to take this trade, and it's off to the races. Now, when you take this, if you take this low, higher low right here, which is a beautiful setup, and it works like nobody's business, it's the same thing. You would put your stop one tick under this signal candle. But now the safest place to put it would be under the swing, okay? So if you're getting stopped out a lot, make sure you're putting your stop under the most recent swing, because and you may have to risk a little bit more. So you're gonna have to determine whether it's worth it or not, depending on where your target is, But if you're planning on trying to ride this thing all the way up to the top, it's well worth it because again, here you'll be risking 1, 2, 3, 4, 5. You have to risk about 5 points, which is pretty heavy depending on how many contracts you got. But if you're trying to get, what was possible on here, starting from here, I gotta grab something else so I can measure this right. If I had actually entered here at 79, this thing ran all the way up into 5,900. So, it ran 21 points, right? So if I risked 5, I still could have got a 3-to-1 out of this, easy, but that's it. That's where you put your stop. Okay. So when you're in an uptrend, you want to, or a downtrend, you put it behind the swing. So let's look at that going short. Same deal here. Okay, so here, let me find the second entry. So we're already trending. We know we're in the trend right here. So what you want to do is, you know, we would start our count from here, push up first entry, and we pushed up. Now this one didn't break very higher a lot, but it's still 2 legs back. Like I said in a previous video, you don't have to have 3 or 4 candles to make a leg. One pushback is qualifies. And then we come off right here. So this is my second entry short. Okay, so where will my stop go? 1 tick behind this candle. But the safer place, because this is also a high, lower high. this is 2 trades in one, really. The safer place to put that stop is right here behind the last swing. So you're gonna have to make that decision. You per price action trading rules, you can put it right there. But if you are getting stopped out a lot, or you just want to get a little bit more cushion, put it behind the last swing. Just look if you just use the swings. You put it behind this swing, you're golden. You put it behind this swing, you're golden. You put it behind this swing, you're golden. You put your stop behind this swing, you're golden. You put your stop behind this swing, you're golden. You put your stop behind this swing, you're golden. Okay, so your stop loss should go 1 tick under your signal candle, but what's better than that is putting it under the last swing high or swing low, because that just keeps you definitely out of harm's way. Okay, now when we're talking about when to move to break even, okay, this is going to greatly depend on your trading strategy. It depends on how much you're going for, but I just want to give you a tip. I'll give you 2 tips. The first tip is to not do anything until you get a new swing. So let's say we entered, you know, right here. Say we entered right here. Our stop was here. We're trucking down. This is a baby swing. It ain't much, but once prices get here, I probably will move to break even. I'm up. I mean, I'll be going for 9 points. I'm almost out of my trade at this point. So I'll be moving to break even, right? Because I want to stay back far enough. I need to give prices enough room that they don't come back and knock me out of a winning trade, because that gets my goat, okay? So I got to stay back far enough that prices don't come knock me out of a winning trade. And I would rather be uncomfortable longer to make sure I win. And what I said was very important. I would rather be uncomfortable longer to make sure I win. And what I mean by that is this: your natural human urge after you enter a trade is to get out of risk as soon as possible, because you're uncomfortable. And you're uncomfortable because the possibility of losing is still possible, still in play. All right. So your natural human urge after you enter a trade and get up, you may enter this puppy here, and as soon as it gets right here, you know, you ready to move to break even. and it's a natural urge because you're uncomfortable. You want to eliminate the possibility of losing, right? You want to eliminate the uncomfortable feeling you're having while the trade is still going and fluctuating, and every little tick up or down is causing you some type of emotional reaction, right? And you know that if you move to break even, all that emotion will stop, because you know you're out of risk, and you're just like, oh, whew, I'm out of risk and I won. You know, it's a feeling of, hey, I won. You're trying to get to that feeling of winning right away. But what I'm trying to share with you is that if you have that feeling of, you know, trying to get out, trying to stop that feeling of being uncomfortable, many times, now it doesn't happen here. Let me show an example where it did happen. Let's say you entered right here. Let's say you entered right here. It pulled back first. That made you uncomfortable, right? That you was, you know, you almost lost. Your stop would have been here, right? You almost lost, but you didn't. Then it pushes down. So now you have this feeling of relief, right? It's pushing down, it's dropping, and you like, hey, we finna fall through the floor. I'm gonna go ahead and move to break even. So then, what did I say you entered? Oh, you entered here. So then you move to break even, right? Because of this candle. But then look, the very next candle comes back, knocks you out, right? And then drops. Now, that example may not be exactly accurate because if you actually entered here, your stop was here, you would have got knocked out either way. So, I mean, actually, you saved yourself a loss on this one. So, this particular example, and it ain't what I was trying to show, because that one going to break even would have worked, and that's the catch. Sometimes going to break even, hey, it's going to break even early. Sometimes it's going to keep you from a loss. Okay, that's true. That's just part of trading. There's no way to get around that. Sometimes moving to break even is going to save you money, but many times going to break even too soon is going to cause you to miss this run. I would rather lose a few times, by giving the trade room to breathe, than miss this run. Because see, when I lose, I'm losing 3 points. Okay. Typically I'm risking 3 points or less, depending on where I got to put my stop, right? So, hey, even if I lost twice, I'm down 6 points because I'm giving my trade room. I'm not moving into break even. Even if I lost twice like that, I'm down 6 points. The very next time I catch one like this, because I have a habit of giving my trade room to run, you know what I'm saying? Yeah, I lost 6 points here, but let's see what happened if you give your trade room on a drop like that. Let's just say we enter up here or something. This was actually a better example. If you enter here and stay back long enough, don't get knocked out, right? This was actually the example. Say you entered here at 79, 75. It pushed down. You get down here under the MA, man, you want to move to break even. You're thinking you're in the clear. Then 2 candles come back up, knock you out, right? And then what happens? Bam. Falls through the roof. I said falls through the roof. Falls through the floor. So you got in at 79, 75, and this thing fell to 78.40, people. Do you get my drift? 39 points. You would have missed a 39-point drop because you moved to break even too soon, right? You enter, again, for that example, your entry would have been here. Your stop would have been here. But once this drops down, you try to feel it uncomfortable. You move to break even right here. Prices come back up, knock you out, and then drop 39 points. Trust me, that will get your goat, okay? And it's probably going to lead to some terrible trading after that, especially if you don't quit. So you have to, when it comes to moving to break even, you have to learn how to be okay with being uncomfortable, okay? Have to learn how to be okay with being uncomfortable. And I'll tell you what else. When you enter here and this thing drops, instead of thinking, man, where can I get out? Start to think about where can I add on? So if this thing drops, if you come out of this and it drops like that, you basically caught a first leg. So when it comes back and you get this second entry short right here, this is where I'm adding on. It's not where I'm thinking about getting out. It's where I'm thinking about adding on. And the second half of my trade is double what this first half was. Okay. That's how you turn a drop like this into a week's worth of profit or 2 weeks worth of profit, right? You only need, you catch this run right here, 39 points. The first half of it, you was at 3 contracts. Well, I'll be doing 4 contracts. The first half of it, I'm at 4 contracts. The second half of it, I'm at 8 contracts. I mean, we're talking about a $5,000-$6,000 trade. Okay. $5,000, $6,000, $7,000 trade. So, but you miss all that money if you enter here, when prices get here, if you move to break even, you miss all that money, and then bam, 2 legs down. If it's been happening to you, it's just something you have to work on. It's something you have to fix your emotions, that once you're up, don't be scared. Once you're up, don't be fearful. Once you're up, instead of always saying, where can I get out? Start saying, where can I add on? I'm in a winner trade. I picked the right direction. I picked the right entry. I put my stop in the right spot. It's time not to shoot myself in the foot or any kind of way. It's time to make the most of this win, because this win could be the win that's so big it makes up for the next 12 losses. See what I'm saying? So when you in that big one, don't be fearful. Instead, start to think, keep reading the price action, right? Instead of being scared through here, just be like, oh yeah, I done caught one. Realize how far away you are from the EMA. So we know we're going to have a mean reversion to the average price, which is the 21 EMA. Push up, first entry pushing up, second entry short, up, time to add on. I see a second entry short, I see a high, lower high, time to add on to my position. And this whole second leg, I'm making double what I made on the first leg. All right. So I hope you guys enjoyed this one. This is a great time to like, share, and subscribe. Hit that like button for your boy if you was feeling this. If you feel like this is going to help you, and I know it will, if you follow these, if you make these slight adjustments to where you put your stop under the swing high, swing lows, and how you manage your emotions when you're winning, it will make the difference. It will make the difference. Okay. And if you're brand new to day trading, I recently did a video on some 2 obstacles that you will have to overcome if you're just getting into day trading. So you can check this video out right here, and it will put you on to game on that. All right. So until next time, my name is JD, and as always, I wish you increase on the Sutton. Bye-bye.